Hey, it's Mac with PriceActionTradingSystem.com, and this is Wednesday, April the 24th. This will be our chart lesson today. I was gonna demonstrate a long here, but I couldn't get filled. This bar was so big that I didn't like going long at the top of it, so I wanted to get filled right here, and it bounced off my order multiple times, but I couldn't get it filled, and so I gave up on demonstrating that trade. Um, we got this tight range. I've gotten a couple of emails today, people saying that it's been really hard for them today. And if you don't know how to trade a range, or you're not comfortable, or you don't trust the setups, it can be hard, but you can't hardly go wrong buying the lows or the highs, especially when you get these nice reversal bars after a new low type deal. Um, you got to pay attention to those. We're really making slightly lower highs each time, but we're not really making lower lows. So the range just seems to be kind of tightening here. We've really got some strong support down in here. We got below what I believe is the actual support here on these two swings, but that just gave you a great chance to buy right there. Um, the thing you want to do really is stay out of the middle more for the most part. There was a nice trap here with the setup, so I did take a long here, and I did mark it as a long. But for the most part, notice there's not much, marked uh, in the middle because they're a lot more risky when a range is this tight because there's just not a lot of room between here and here. So you got to be careful with them. Um, and you can still use your trend lines. You notice we had this little range working down, and somebody told me about it, said they had a failed short here, but notice that by the time you really got a good short, it was right here, um, and then you're still so close to the low, and you got all these overlapping bars. It's just not a very good setup. I wouldn't really be looking to go long here, but I wasn't looking to go short. And the only reason I like this long is because we already had this low here, kind of a double bottom earlier this morning during the overnight or late last night, however you want to look at it. And then we made another double bottom in the same place. And look at that. That's a reversal bar. Even though there's a little bit of red, let me make this bigger. Even though there's a tiny bit of red right there, that could have closed up or down either way. That still takes a lot of buying momentum to break above that. So you can go long right here. Fairly easy scalp. Um, if you wanted to ride it out and hold on, you could have gotten more. But, when it's this tight and you get this much overlap, I generally just scalp out and be done with it. So, again, you might have thought about going short right here, but unless you could get short way up in here, it's not worth taking it again. And because there's not a whole lot of room to scalp out. And now we've bounced off this low 1, 2, 3, 4 times, and look, the closes are getting higher each time, not lower. So it's not a good sign, and the odds are we're probably going to go back up. At this point, you're looking at the range way up here. It hadn't moved down to here yet. So, okay, I got distracted there, and you can see this trade still would have worked out if I could have gotten in it. I probably should have just went ahead and moved my limit order up, but I hate to chase an order and get in too high, and then it turned down right there at the EMA. So, but I can't remember where we were over here, what we were talking about last. Let's just go ahead and talk about the trades. I think I was talking about this trade right here. It's a second entry long coming off this bottom here and there's really kind of two legs down. There's two legs in the first leg of correction, then another two-legged move down. It was a little bit bigger leg, but nice entry here. Again, I think we were talking about why we didn't like these trades here. Again, the same thing here. I was looking for prices to maybe go up to here, and they hadn't really moved. We didn't really have this established till this came into play. And then you don't want to be going long out of that. Notice what a good entry looks like. Look at that reversal bar. That's a good reversal bar. That's a good reversal bar. Coming off the high, that's a great reversal bar. That one's still pretty good, even though there's a little bit of stem in there. Look how far that moved down. They beat it down quickly. But look at that. It's all that overlap. And even though that's a good signal bar, if you can't get in way back up here, you don't want to fool with this trade. And notice how finally you got all the overlap before it makes another move down. So it's just not a good entry. And, you know, most of your better entries, you're going to have a good setup bar. And it doesn't mean always. Sometimes if the trend's really strong, you'd want to go ahead and take that because this is, you know, if this isn't holding and we're making new lows, then, you know, you'd want to take that trade right there because that's a great second entry long with a huge reversal type bar. Again, you'd probably want to use a limit order and get in, you know, a couple of ticks into it. It's just, I don't think that one would have worked even if you'd have entered. You wouldn't have got filled here because this bar would have ended as a doji, and then you don't want it to tick back really, kind of like I did this trade over here. When it ended as a doji, I exited it. You see it still worked out, but it wasn't worth risking it because it's not a great setup. So same thing right there. This is another, now you've got a double top here where you had a high before and a great reversal bar. Again, try to drop you a limit order about halfway through. That's how I entered. You know, didn't get anything more than a scalp. But then it pulls up and you get another chance to enter right here. So now you got a triple top, and notice what happens this time. It moves all the way down. Any runners would have, depending on where you entered, again, you want to try to use a limit order if you can. Sometimes you'll miss a trade, but, you know, you drop it in a tick or two back. A lot of times you can drop it in right at the end of the bar or maybe one tick in, and you'll usually get filled on those. Not always. The more you try to get greedy or the more conservative you get, depending on how you want to look at it, is when you tend to miss them. But after 3 times off that high, that was a pretty good trade. And then you got your lows down here, and you finally get a break. It was tempting to go on this one, but with that new low, you're better off to wait on a second entry long, which didn't come to right here. And you really got a new low, but now you failed to go lower really twice, and this is a great reversal bar where this one is not a real good reversal bar. And that's what good reversal bars look like. You really can't, on this one, the best you're probably going to get is dropping a limit order right there. You're better off just to put a stop there, and if it breaks above it, and notice how it took off. It rocketed on out of there. Great trade. Again, you're getting back to the middle. Look at all that overlap. Not worth entering there even though you went higher. And this is kind of moved down here. Now you got your closes in here. You got a little failed break, a lower low, and then a lower high. And again, a reversal type bar. So try to drop you a limit order right in there. Even now it's okay probably to go short below that with a stop. You could see either one would have worked. And I didn't like this long coming out of here, again, because look at those bars. They're, you know, 3 overlapping bars. They're dojis. And look what happens. It breaks out and it comes back, and then you get a chance to get a better entry. And on this one, it broke lower first. So when it goes out the high side, you got a trap. So what I did was wait for it to break out, and then I dropped the limit order there, and it did tick back and fill it, and then off it goes. And even if, you know, you don't want to let it fill it coming back from here after it's gone that high because it could turn back down. There really was an entry here as well. Notice that one tick trap, and then it turns down. So there was an entry there. I didn't like it as much because of all the overlap, but it does have the little trap there. If you saw that, let's just go ahead and make that one green if you saw that one. I was pretty much done by that time, and so it wasn't the best setup, so I just missed marking it. But if you saw it, just in case, because somebody will inevitably ask me about it, that probably got short there. You can see it worked. And then I'm going to go ahead and mark this one in blue because it was a good setup, and I tried to take it, but I was a little bit too conservative and didn't get filled. It bounced off my order multiple times there. That's where I put my limit order on that one. And it just couldn't get back there. And that should have been my sign that we were probably going to go higher. But you don't want to chase a trade up and make a mistake. So, but you can see it would have worked even if you dropped your limit order here or here. And what I didn't like about this one was it ended in those 2 dojis. I would have liked to seen a trap, and then it turned back up, and I wouldn't have been scared to go long even above those 2 little dojis. But we never really got a trap, but that's a sign that the market's too strong. And I noticed that the bid and the ask dropped down here several times and was touching my order, but nothing. You noticed that on both those bars that nothing ever closed down there, so nobody was even interested in selling right there. They were all thinking buying. Um, and the reason is because look what's happened every time we've come down there, and look what's happened every time we've come up here. It's so predictable. That's why I like these kind of days, and just, look for a good setup bar off the highs or lows. Take the trade. Don't get in too high off the lows. The closer to the low you can get, or a little trap makes it even better. And say that, yeah, that little trap where you went one tick lower, and here you had a little trap where you went one tick higher, then you came back and you couldn't get back up there again. Those little traps, they're a stronger double bottom than, the even ones. So because you get the trap, and it traps shorts in, it traps long, when it went lower here, it trapped a lot of longs out, and it trapped a lot of shorts in, people that think this is a smart place to get short. I mean, I read it all over the internet about, how to trade these ranges, and they tell you to sell on the bottom breaks and buy on the top. And that's just the opposite of what you need to be doing in most cases, especially in the ES. That's I can show you over and over where when you get it right, you'll make a lot of money. But guess what? You'll only get it right enough times to keep you trying to do it, and you'll never make any money. You'll be a loser. So don't attempt that. But that's how you trade these kind of days. You buy the lows and you sell the highs. And as bad as I hate to even mention it, when we get to where we're not dropping lower and it's bouncing every time, I'll sometimes buy these blind. I'll just drop a limit, like coming back up here, I'll just drop a limit sell order here, a tick or so in front of that, or I'll drop a limit buy order, and I'll just wait for it to come to me. And then, because you'll usually get a bounce inevitably, just like right here. Notice how it got down there and it bounced, and you'll usually get a bounce of enough to get out with your 4 ticks. Just buying it blindly, even if it's going to go lower. So, you only want to do that when it's a known trend and it's, and it's proven itself multiple times. But eventually, after it's done it too many times, you got to be careful doing that, because at some point we're going to break out of here, even if it's only a trap, or break out down here. Now, the biases have been up lately. We traded up into this range. Notice we've, the previous overnight highs were up here, so it wouldn't surprise me to see this thing expand up into here before it's over today. But then again, it wouldn't surprise me to see it come down here and maybe make another leg down like this, starting right in here somewhere. So just be careful how you trade it. You can see it when you back out. It's a tight range, and look what's happened every time you come off the highs and every time you come off the lows. I only took the ones that are conservative, really. Showed them, but like I said, there's some other entries in here that would have still worked. But you wait on the good ones, the ones that are more of a sure thing. We don't want to be gambling. So I hope that all makes sense to you. Again, I love these kind of days because they're really so predictable. But I know a lot of people struggle with these because they're scared to buy down here and they're scared to sell up here, because common sense says, when prices are down here, the market's moving lower, so you got to be selling. And when it comes up here, your common sense is telling you, hey, prices are moving higher, I got to be buying. But, that's why that's why trading is so hard for somebody with really strong common sense. I always say that, and I know that sounds ridiculous, but I can assure you, if you trade with common sense, you'll probably never succeed. And that's why so many people struggle. That's why so many intelligent people struggle to be traders, because common sense, you can throw it out the window, and you really need to be doing almost the opposite of what feels like is the smart thing to do. So you can't be buying up here unless you get a breakout pullback, and then this acts as support. Then you might consider going long, but see what would have happened down here. Notice that we broke below this. Really, it was kind of right there. We broke below it, and we broke below it again, but never does it act as resistance. So it's still support until it acts as resistance. So if this bar would have come up and touched it perfect and then turned down, then you might have considered going short. And no other time have we gotten below that. So it just continues to find support down here. It found a little higher support right here, and here they had a little trap. And notice up here we've broken above what I'm showing. Really, the highs have moved down yet again, probably right across. You really get the most touches right across there. So I would look for prices maybe to pull back here. And if we make a measured leg up, depending on where this pullback ends, let's say if it is going to be right there at the EMA, guess where that gets you back to? Right up here to the top where the last closes were, which is where I'm figuring we're going to end up at some time during the day. So that's a good chance that that could happen. Don't go trading on that because I threw it up there, because it may not happen. We may end up turning back down here, but just something to look at. So if you get a long setup here, but really right now you got to be careful going long, because you know, you're getting the most touches and closes right across there now. So until we get through that, you got to be really careful. But eventually we probably will and go up and test these other highs. So I'm going to wrap it up. Not much else to talk about here. Just understand that when you got a range like this, you want to be buying the lows on good setups and selling the highs on good setups. Don't be buying up here and don't be selling down here, because otherwise you get trapped like these poor souls did that went short down here. And you watch it go the other direction, and it burns you. So hopefully that makes sense. I'm going to wrap it up today. If you struggle today, watch this video a couple times until maybe it makes sense to you what you want to be doing, and continue to practice it. I'll say this a lot, and I probably don't say it enough. If you're not a consistently profitable trader now, don't be trading live. Get on the simulator. Create yourself about a $5,000 simulator account. Clear it out. Start with about $5,000 and just trade every day and try to double or triple that to 10,000 or 15,000 or whatever. And just take the trades every day. Don't worry about whether you're right or wrong. I hear people say they're scared to pull the trigger and this and that. But if you're sim trading, just follow the rules as you know them or you think you know them, and then at the end of the day is when you worry about whether you were right or wrong. You go back and you study and you figure out what you did right and try to do more of it, and figure out what you did wrong and try to do less of it. That's how you become a better trader. If you're trying to learn with a live account, it's just like riding down the highway and rolling down your window and throwing your money out, because you're going to give it to somebody that knows what they're doing. Trust me. I don't care how good you think you are. If you haven't proven that you can trade on a simulator and make money every day, you're not going to make money trading live. And that may hurt some people's feelings, but I'm just being honest with you, and I'm telling you that to try to help you and save your money, because you don't play with live money. You just don't learn trading live accounts. Sure, at some point you still got to go live, and you're still going to struggle with those emotions that are going to tug at you. But if you've proven you can do it on the simulator, you're light years ahead of just dropping into a live account and trying to trade and not having a clue. It's like, I promise you, if you're not a successful trader or you've had very little experience, and when I say very little, I've got thousands and thousands of hours of sitting here watching this thing. Think about that. And you come in here and let's say you got even a 500 hours, well, you're going to struggle trading against me. It's just like, I'm trying to give you, let me think of an example. One I really like is if you're if you've never stepped up to bat against a professional pitcher in the World Series, what do you think the odds of you getting a hit are going to be against that guy? Probably nil. And you might get lucky and hit one that goes out into the field, but think about trying to do it 10 times. How many times do you think you're going to hit? You'll be lucky if you can. I mean, the professionals can only bat two or 300 on average. So your odds, you're going to be batting probably zero. And trading is no different. You're going up against professionals that have been doing it for years and years and years, that understand how to read this chart, that understand what's going on. And until you get to that point, don't go in and trade live. And I didn't mean to get off on that tangent today, but I really think I should say that more often for people, because it looks easy. I make it look easy. Yes, looking at it after the fact, it is easier. But it doesn't take rocket scientists to figure out that every time it came down here, if you'd have bought, you'd have made money, and every time it came up here, you'd sold, you'd have made money. It doesn't take a rocket scientist to figure that out. It's common sense. And but you have to know that. You have to know that that's what you're expecting to happen. And if nobody ever tells you that, then you're using the other common sense that says buy when it's going up and sell when it's going down, and you're right in the middle of a terrible place to be. So anyway, I'm going to wrap it up. I think that's enough of me being on the soapbox today, but I want to have that conversation more often because it's an important one, and I just hate to see people jump into the market with a nice, and people tell you, oh, you need 20,000, 30,000 to learn to trade. Well, sure, they want you to jump in there with your 30,000 because they want to get their hands on it. You don't want to jump in with an account like that and start trading thinking that you're going to make money because all you're going to do is give it away to somebody that knows how to trade. I can assure you of that. I've seen it happen over and over and over and over, and I read the stories every day of people it happens to. So don't fall for that of getting in there with a 20,000 or 30,000 or 50,000 or even $100,000 account and thinking you're going to learn to trade on it because all you're going to do is donate it to somebody else. I can assure you. So anyway, that's enough for today. I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you tomorrow.